What was your reaction yesterday? Do you feel as though things got overdone or there's more downside left to come?
Hey, good morning, Dom. Yeah, I was certainly shocked at the market's reaction to the ending of the party Congress. I thought the market really did anticipate that President Xi would elevate key allies. Some of those allies that were promoted to play a key role in Chinese government definitely were associated with the zero COVID policy, but I'm absolutely shocked at the market's response. There's more rumors yesterday, Dom, that a potential levered player was liquidated just based on the extent of the market drawdown. It was really just a pure selling panic, really just a lack of buyers as well. So just a very strange day. Hopefully we get a little bit of a snapback here in U.S. trading hours.
Can you blame them? Can you blame the lack of buyers out there for being a little bit apprehensive about stepping into this market, given President Xi? I mean, there are people who now call him Emperor Xi or Chairman Xi. I mean, this is one of those situations where his administration has been one that has cracked down on many of the most important companies in China. What's to say they're not going to keep doing it in the coming months and years?
Well, I think President Xi's speech last Sunday, where he mentioned modernization almost 90 times, the most frequently said word in his speech was actually modernization. There was also a clear emphasis on the economy. I mean, certainly, if you want common prosperity, you need some level of prosperity. So I think, we were a little bit shocked that, yes, President Xi is certainly in full control of the Chinese government. And certainly I would agree that many potential buyers have been sidelined due to issues like the Holding Foreign Companies Accountable Act, due to zero COVID and the real estate policy, what's happening in real estate in China, and certainly just the strong dollar, Fed hiking. It's been a risk-off market, not only in U.S. equity markets, but certainly for global equities, for risk assets in general.
From a sentiment standpoint, this has been perhaps just the latest leg and the latest chapter in a long downtrend for Chinese equities. There are growth concerns. There are concerns about zero COVID policies and what it does to the economy, the second largest economy in the world. What is it exactly you think that brings investors back into some of these names, given what's happening with this economy, given what's happening with the Xi administration, given what's happening with just poor investor sentiment overall?
Yeah, 100%. I mean, we need catalysts, Dom. Certainly investors have been sidelined because of this sum of all fear, the numerous issues that we spoke about. And I think for the Chinese government, it's time to get back to work. The party Congress is done. Political leaders have been established what their roles are going to be. And now it's time to address the economy. They have to address what's happening with housing, as well as the easing of the zero COVID policy in order to get consumer confidence. And we're potentially starting, we should hopefully see those signs in the coming weeks and months. Certainly Alibaba Singles Day event started on Monday, the pre-sales. And I think, we're starting to see some early indications that those numbers look pretty strong in the very early goings. But we need these catalysts. We need a resolution to Holding Foreign Companies Accountable Act. We need U.S. and China diplomacy to return. We need the two sides to actually sit down and talk to one another, or else it's not just about Chinese equities, Dom. It's about the U.S. multinationals that do a lot of business in China are at risk. It's worth noting Tesla was down yesterday. A number of the U.S. multinationals that have a lot of business in China were actually off yesterday. So this isn't just about Chinese equities. It's also about U.S. equities that have a lot of exposure there.